Yo guys, I hope everyone's doing well. I've been getting a lot of comments on my videos asking what strategy I use to get my payout, and what model I follow on day-to-day basis. So I just thought, why not make a video strictly based on my strategy. First things first, I'm not a good teacher, guys, so sorry if I don't explain things well. And also my model is basically TJR and ICT. Well, ICT is basically TJR, but TJR explains in a more simple version. And I combined them two and just created my own thing through their confluences. Well, order blocks and fair value gaps are basically retracement tools. So anyways, let's get straight into the video. I created these slides ages ago when I started learning this strategy that I found. So I'm sure all of you know what an order block is and a fair value gap is, because you would have been watching this video right now. But anyways, I'll explain it. So basically, an order block is literally where prices like the leg down before the liquidity sweep or the leg up before liquidity sweep. So straight after a liquidity sweep, there's always going to be an order block 80% of the times, yeah? And it's basically where price ranges, where a significant amount of orders are typically filled. So in simple terms, it's basically a retracement tool. Like as you can see here, we have an order block, boom, price comes down, taps in right here, and price plummets down. That's a bearish one. This is a bullish one. We get a liquidity sweep, boom, get the order block, the high of that candle. We wait for the expansion swing up, boom, and we wait for price to retrace back down, boom, price goes higher. That's an order block. But we can't just trade off order blocks, yeah? Then we'll be losing half of our trades. I mean, you can get lucky, but we need extra confluences to make our order block high probability or win rate. Therefore, I use fair value gaps. So after an order block and we get the retracement down, I'm typically waiting on the 1 minute or 5 minute, depending on how price is moving, a fair value gap and imbalance in the market. So basically a fair value gap is area where price of lacking orders need to be filled in. Why do we want to know where they are? Because price will typically want to fill that imbalance and balance out price. We cannot have a candle closure above the fair value gap, because that will mean it's disrespected. It can have wicks going above or below. So for example, if this wick went above the fair value gap, that's fine, that's high probability. But if the actual candle closes above the fair value gap, it's disrespected. Trade price is gonna go in the opposite direction most times. What's this? And obviously we need to know our daily bias. If we don't know our daily bias, there's no point of trading. Daily bias is very important in this model. And this model is more for low IRR. You can do high IRR, but I typically trade with low IRR but more risk. This is basically my trading recaps. Here, let's see if we got one here. What's a good one? Alright, here we go. No, that's the nice one. Trying to look for a good example for you. Alright. This one. We look for a daily bias. So we mark out Asian session, London session, and New York session. Yeah. So you mark out the highs and the lows for each session. So for this, we had Asia accumulation, London manipulation, because as you can see, London touched Asian sessions high straight away and fell down, literally plummeted down, and then we start consolidating. So now we're looking for New York reversal and a bit of manipulation. So when New York opens, you can't see it, but we did come up straight away, and then that's the manipulation. Now daily bias is bearish for the day. We get an order block right here, 5-minute order block, and now we get the expansion swing down, boom. Now we're waiting for price to retrace back to the order block. You can see the little wick up there. Let me zoom this in for you. Boom. All right. Now we do not chase price. Now we wait for our fair value gap. All right. I think this is on the 1 minute. All right. So we see a 1 minute fair value gap. Boom. Imbalance. And what are imbalances in the market? It's basically a retracement tool, so it balances out the market, the void, whatever you want to call it. Anyways, so we get to retrace them back to the fair value gap. Now we're waiting for a candle closure below our recent candle. Boom, we get that. I set my stop loss either on top of this order block or above this fair value gap, and we just target liquidity sweeps or high time frame confluences or retracements. So I think I targeted it in this. What did I say in this one? I said we also saw a bearish S&T, so that could also help. I didn't say it, but I targeted maybe a 4-hour fair value gap or liquidity sweep. That's it. That's basically my model. So anyways, we're gonna go in back testing now. When I don't know, July 24. Another thing, we only trade New York session and New York Killzone, which is about, well, since it's daylight savings, I don't know the time, so but normally when it's between 9:50 to 10:10 New York time. I don't know the American time. That's, yeah. So in July, daylight savings hasn't happened, so New York opens 9:30, and Sydney time opens 11:30 p.m. So let's go to New York open. 1 second, guys. We'll do it live for you. 11:30. Fuck, I went too fast. Shit, doesn't matter. 11:30 is right here. What time is it? It's Wednesday. Okay. I do not know the time for Asia, what time Asia session opens for New York, but opens 8:30 for us. So 8:30, boom. And then London session opens 5 o'clock, I think, which is 17, boom. Now, like I said, we mark out the highs and the lows of each session. Boom. And boom. We'll change the colors so you guys know. Red. Alright. Get our gearbox, equilibrium as well. Sometimes I use this, not all the time. So we're obviously bearish for the day. That's our daily bias. But remember, price can change at any moment, guys. This game is all about probability. So let's go on the 1 minute now. See, if price is moving like this, we do not trade. Here we go. Actually, just seen our setup. All right, we have an order block right here. Let me show you. Marked out. I want to mark out. You can either mark out the wick or the candle, the actual candle itself. Doesn't matter. But this is a high probability one. If you mark out top of the candle, low probability, you mark out the order block just through the wicks. So we'll mark it black so you guys don't get confused. So boom. We get price comes down, retraces back up. That's the order block in between that. Now we're looking on the 1 minute for a fair value gap. Boom. Now we're waiting for price to retrace back to that. If it doesn't retrace, we don't enter. We'll go on the 5 minute as well. Here we go, 5 minute. Price doesn't retrace to that. We go. Actually, where does price want to go? Let me quickly see something. Alright, price is most likely to fill out this liquidity sweep. Yeah, I mean, this will work still, but now we go on the 1 minute. We marked out our second fair value gap. This will work. Actually, it will work. But the thing is, since the fair value gap to the retracement has taken so long, our risk, this is a bit of a risky one. But if you're very confident, you could do this. Target that. I'll put my stop loss right there. But no, there's also this fair value gap. This is when it gets tricky. So price may retrace back to this fair value gap. So just in case, we put it above, a bit above, and we target this liquidity sweep right here on the 4 hour, like I just showed you before. This is obviously continuation down to the downside. We do 7, sell, 7 minis, sell limit right here. That was actually a bit too much, but doesn't matter. We're only demo trading. And let's see if price retraces back to the 5 minute or goes down. Alright, see, it's filling out the imbalance on the 1 minute. And this was over here. Or is it going to come and touch that? See? Price touched that fair value gap. See? I knew price was going to touch that. You could have, oh, you guys can't even see, bro. My bad. I looked back. I'll put it up here. Sorry, guys. Fuck. Hopefully you guys got that. Skip. Consolidation. Hit that 4 hour fair value gap. It doesn't even hit it. Fuck. The trade would have automatically closed us out. What did we do? More bounced off. See? Oh, so close anyways. Probably hit it later on, but I would have woken up and just closed the trade. But at least we're right where price wanted to go. See how price retraces back to the 5 minute. You can either wait for that or just target a 1 minute, but just set your stop loss above that fair value gap or above the order block. It's up to you. Alright, we'll do another one. Maybe we should do it pre-market. No, look. Alright, we'll see this one. Perfect example if I can see this. Boom. This is on the 5 minute. Go back to this. We target this one. The candle for the liquidity sweep. Boom. I wouldn't price tap into that. Actually, yeah, price tapped into that. It's the candle before the liquidity sweep to make it a valid order block. So this part. Boom. Price came down, tapped in the order block. We've got on the 1 minute. This is an invalid fair value gap on the 1 minute. See how the candle closed above the fair value gap? That makes it invalid. So then we would just go, this is shitty price action. That's the thing. You don't want to be forcing trades. Where did that go? Fuck, I don't know where it went now. Doesn't matter. We'll do another session. I went too far, but ready? Boom. Mark out New York session, which is 9:30. This is Sydney time, obviously. Boom. Go on the 5 minutes, better. 17. Oh, 5 o'clock. Boom. Mark out the sessions. Mark out session highs. Boom. 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 I see this so clearly. My eyes fucking close. Alright. Let me explain this to you quickly. We obviously got previous session manipulation plus reversal. So, new session reversal. As you can see, guys, this is so bearish for the day. Oh, fuck. This is very, very bearish. Let me explain to you. So, as you can see, we got Asia session. Boom, we touch these highs. I don't care about Asia session. We're obviously consolidating or whatever. Not really, but we're manipulating because we touched here and price came straight down. Right, this is London session right here. Price came straight down, boom. Anyways, London session. We don't care about Asia session that much. It's not really important. We only care about the previous session. So, price comes down, takes out Asia session lows. Boom. Price manipulates and swings back up and touches Asia highs. Alright? That's manipulation right there. Now we're looking for an entry. What time is this? 8:30. So we could have pre-traded pre-market. Let's go on the 1 minute actually. The one before the liquidity sweep. Boom. Actually, it's this one. Yeah, I'll just do this so it's better for you. Boom, price comes down, retraces. Alright, we're looking for a value gap on the 5 minute. Boom, 5 minute for value gap. Price retraces back on the 1 minute. This is like low probability, but this must have been news day. And I would have targeted. Boom. That's it. 5R. Literally, that's it. Alright. Let's see if looks like price wants to reverse. Go on the 5 minute. Target this. Boom. Waiting for the retracement back to this order block. We had the retracement already. The wick down. See, price comes up. We get the wick down. Now we're looking for a value gap. We don't see no fair value gap. Imbalance in the market. Let's go back on the 5 minute. We touched again the order block. Now we go on the 1 minute. We see a very small fair value gap right here. Now we wait for the retracement. Retracement, boom. That was a candle closure, so it makes it not a trade to trade with. So we cancel that. So that's why, guys, you got to follow your setup, because days like this will happen. And you think a reverse will happen, and it doesn't. This, if you look at this, boom, basically after liquidity sweep, there's an order block, boom, right here, the candle before it. We get the retracement. Here, we'll go on the 1 minute, it's easier. 1 minute, boom. See if we get a 5 minute for value gap. Don't. On the 1 minute, we have price here. And we also have a 1 minute here. Let's see if price retraces back to it. Look at that. Look at that. That's prime example of retracement. Price retraced back to that 5 minute. No, was it 5 minute? No, 1 minute for value gap. We're waiting for the break of structure. Boom, the break of structure was right here. BOS. Boom. Now we're targeting shorts. Boom. We'll put our stop loss right there above the order block, which is right here. So maybe around T. And then we go on the 1 hour. No, actually 4 hour. We'll target this and this. Click sell. Take profit. We can take out. Actually, we can just target that. Honestly, that's negative RR. We'll target this. We could put our stop loss above here, but we'll do it here. Go on the 1 minute. What time is it? 1:04. Skip. That's it. Price bounced up to that liquidity sweep. Goes down. Literally, that's my model. That's all I do. We took profits perfect in that. That is it. I'll do one more, guys. One more, even though I'm not that good at explaining things. Actually, you know what? We'll go on one of these ones, eh? Remove drawings. Mark out 12:30, 12:30, 12:30. Boom. This was on Friday. 18. It's daylight savings and 9 a.m. This is because it's daylight savings. Boom. 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 What do we see here? We see it. We see manipulation plus reversal and new session continuation. So we got a bit of manipulation going on here. Asia session, boom, manipulation. Over here also, and this is when we got the reversal going up, and this is where the continuation. Now it's just looking for a thing. You ready? This is so I can see it straight away. So obviously it's continuation, so price is going to continue going up. Boom. Order block right there. What happens? We let price go up, manipulate, blah, blah, blah. With this, guys, remember, we do not chase price. We chase our setup. Boom, we get the expansion swing up, 1 a.m. Come down, 2:30. Alright, now we're looking for a fair value gap on the 1 minute. Boom, fair value gap. We get the wick, 50% wick, high probability fair value gap on the 1 minute. Me, I would have targeted only, this is long position, would have done that, would have entered right here, would have targeted these highs. Literally, that's it. Look at that, 1.74, that's all you need. But I don't know if I'll be staying up that long because I got work in the morning, so I'll try and find my my model in the first half an hour to 1 hour trading. And that's literally it. I would have taken partials. Actually, I would have taken partials at Asia session highs, and then these highs, this liquidity sweep. Literally, that's it. That's my model. Order block and fair value gaps. So remember, we see an order block. Boom, on the 5 minute, 1 minute, whatever works for you. This works for me, so I'm doing what works for me. 5 minute order block, boom, or 1 minute, does not matter. Same shit. Alright. 5 minute order block, boom. This is bullish order block. If I can't even speak. We'll wait for the expansion swing up. Boom, expansion swing up. We do not chase price, remember. We wait for the retracement back to the order block. Boom, we get the retracement. That's one. Tick that off. Tick. Order block plus retracement. Now we're looking for a fair value gap plus retracement. So we go on the 1 minute. 1 minute or 5 minute does not matter. I went on the 1 minute. 1 minute, boom, fair value gap. Boom. We get the retracement back down. And we just target it. Higher time frame confluences. That's it. Can target whatever works for you. I target 4-hour fair value gaps, liquidity sweeps, whatever works for you. That's literally, that's my model. Typically trade in the New York Killzone, which is 950 to 1010, I'm pretty sure. That's the main move. And you got to make sure you know your daily bias. If you don't know your daily bias, then you're cooked. And remember, price can change at any time. This was previous session manipulation right here in Asia. Plus reversal, we get the reversal, boom, and we get the continuation going up as price does not manipulate. It does a tiny bit over here. This is where price manipulated. See, we're consolidating, price is manipulating. Boom, we touch that, that's manipulation. Come down and boom. Target that high. Boom, and we come down to the order block, and that's it. That's my model. Alright guys, I hope you guys understand. I tried my best to keep it simple. I'm not very good at explaining things, as you guys can see, but if you have any questions or anything, leave a comment on the YouTube video. If not, I'll leave my Instagram. You guys can DM me. And that's it. Thank you guys for watching, and I hope you guys have a good one. See ya.